Good morning, good morning, good morning. Welcome to today's Morning Blast with myself and Mr. Michael Brown. It is Tuesday the 17th of June all day. As usual, we will be giving a jumpstart to your trading day with a preview of what's coming ahead, a review of yesterday, hopefully give you a bit of value, maybe put a smile on your face, who knows. But before we do, let's get the legals out of the way. So as usual, nothing discussed on this basis session constitute trading or investment advice or infers any kind of endorsement by PIQ, that of myself, Ryan Paisley, or indeed that of Mr. Michael Brown. I spoke to Mr. Michael Brown this morning and we've decided a bit of a change up in the structure of the session. I will, before we crack on and Michael gives a review of yesterday and a preview of today, I will rattle off the main Iran headlines. Pardon me, something's caught in my throat today. I'm going to rattle off the main Iran headlines courtesy of Zach from our overnight news roundup, mainly because obviously it's the thing that's forefront in everyone's mind, and also because it gives context to pretty much everything else we were about to say. So before I hand back to Michael, just give you a quick update on the latest Iran headlines. So starting off, US and Iran have discussed a potential meeting this week to negotiate a nuclear deal and end the war, a critical moment that could determine US involvement in the conflict. That's according to Axios. Trump is leveraging US bunker-busting bombs as a bargaining chip to pressure Iran into abandoning its nuclear program, targeting the Fordo nuclear enrichment facility. Trump denies ceasefire talks. This is according to CBS, and also a post that he put on Truth Social. I think now more than one post on Truth Social, stating on Air Force One that he seeks a real end with Iran completely giving up its nuclear ambitions. This comes as Macron said he left the G7 to go and try and talk about a ceasefire, which he's vehemently denied. Trump's Truth Social post urges Tehran evacuation, warning that Iran cannot have nuclear weapons, sparking speculation of US war involvement. G7 supports Israel, labels Iran a source of Middle East instability, urging de-escalation amid rising tensions as tanker rates surge due to risks in the Strait of Hormuz. And just a couple of other bits on that. 1 second. Dun dun dun. Where is it? Yep. So one other thing to note on this as well is the blaze has been spotted in the waters off the UAE and near the entrance to Strait of Hormuz is not security related, according to a maritime risk management firm active in the area. That's the likes of Ambre and also the UK TMO. Again, last night that was getting a lot of attention. Obviously, there was just images of ships on fire fairly close to the Strait of Hormuz, which obviously put the chills up everyone's back. But that's it for now. One thing to note as well, kind of anecdotal, is last night's missile attacks from Iran was significantly less than what we've seen previous nights, and we're seeing some talking heads suggest that might be that because Israel's actions so far have severely limited the ability for Iran to retaliate. So one to keep an eye on that front. But anyway, that's the Iran situation wrapped up in quick style. Michael, back to you.
Well, good morning to you, Ryan. Good morning, everyone. I did say good morning earlier, but realised I was on mute, so I was talking to myself right at the start of that call. So apologies if anyone thought that I was skiving today. I am not. I am here, and we are ready to go, although I am wearing shorts once again. As you rightly said, Brian, we're sort of moving past Iran, and that's certainly what financial markets appear to have done, moving past geopolitical concerns in relatively short order. Yes, we do see equity futures trading a touch lower this morning, but it was a pretty risk-on day across the board yesterday. The S&P up by about 1%, the Nasdaq up about 1.5%, Treasuries trading softer across the curve as the 30-year yield rose back towards 5% once more. Gold down by about 1.5%, trading back under $3,400 an ounce, and also crude, a really sizable move in the crude benchmarks yesterday. If you look at the move on the day, we ended just 1.5% lower, which doesn't sound particularly exciting. But when you think we gapped about 5% higher at the open on Sunday night, that's quite a significant pairing of an extreme point in terms of geopolitical fear that we saw in the crude benchmarks yesterday. So from a market perspective, and I actually put this out on Twitter last night, and we discussed this on the call yesterday, it's very much a case of the only way we're likely to see a significant adverse reaction is if there is something more than these kinetic exchanges between Israel and
Oh,
Iran that
good
we've been
phrase.
seeing.
Good
Very good phrase,
phrase.
isn't it? That we've been seeing since the back end of last week. If that is all that continues to happen, then, well, markets have already priced that in. So we are going to, frankly, just ignore those headlines by and large, unless, as we said yesterday, we see the targeting of something like oil export infrastructure, whether we see any issues in the Strait of Hormuz. And as you said, Ryan, what some folk on Twitter thought to be some sort of act of sabotage yesterday was actually just two ships deciding to crash into each other. For the English folk on the call, Uncle Albert was clearly the navigator on one of those. The other thing that participants are obviously potentially looking for is a broadening of the conflict, either in terms of other actors getting involved, or a sort of more overt push towards regime change in Iran. So unless and until we see any of that happening, I would expect markets to continue to shrug off those headlines
Yeah.
with relative ease. In terms of other bits and bobs that are going on, because of course it is not just geopolitics that we have to worry ourselves with. There were a few notable trade headlines yesterday. The first is that the US and the UK have both signed
Yes.
some sort of proclamation or document as a follow-up to the trade agreement that they agreed last month. This came at sort of on the sidelines of the G7 summit that is still ongoing in Canada. Once again, detail appears relatively thin on the ground, and in fact, Trump actually managed to drop half of the document while he was presenting it to the media. But nevertheless, it does appear that some sort of more concrete
Well,
progress is being made on that now.
on this, not only did he drop it, he then did say, this is the deal I've made with the EU. And it took
Yes.
Starmer to correct him and say, hang on a second, it's with the UK, not the EU.
Yeah, Starmer thought all his dreams had come true and we'd gone back in for a moment there, I
Yeah.
think. Anyway, moving quickly on from that, and speaking of the EU, Handelsblatt, the German news outlet, reporting yesterday that the European Commission would be prepared to accept a flat rate US tariff of 10% under clear conditions. Apparently EU negotiators hoping that such a flat tariff, which of course would just be the baseline levy that the US is applying to all imports, they're hoping that would avert potentially higher tariffs on things like cars and pharmaceutical products and computer chips. These reports were later denied, but of course do bear in mind that the volume of reporting on the trade front is likely to, only continue to increase from here, given that we are about a fortnight or so away from the supposed expiry of the pause on the Liberation Day tariffs that were announced at the start of April. And another thing to bear in mind on that is there were a few, well, more than a few, probably hoping that we would see some trade negotiations on the sidelines of the aforementioned G7 summit. Well, given that Trump has now flown back to Washington, DC, the chances of a significant breakthrough are probably a lot lower, although I believe that Scott Bessent has remained in Canada, so there may be still some talks going on. Away from trade, we did have a couple of data points yesterday. The Empire Manufacturing Index out of the States, that fell to -16 in June, down for a prime -9.2, and also below the consensus estimate. We also had a relatively well-received 20-year sale yesterday, which stopped on the screws, which is not too shabby at all for, as we were saying yesterday, the most unloved part of the curve. And of course, overnight, we have had a policy decision out of Japan, the BOJ being the first of 6 G10 central bank decisions this week, holding rates steady at 0.5% as expected in what was a unanimous vote. They also announced that they would be slowing the pace of tapering. They will now be trimming their bond purchases by 200 trillion yen per quarter from next April. The prior rate was 400 trillion yen. So they have effectively halved the speed at which they are withdrawing from the bond market. Governor Ueda, at his post-meeting press conference, which I believe is either still ongoing or may have just wrapped up as we started the call, Ueda has very much stuck to the script, noting that they will continue to raise rates if their economic outlook is met, but also adding that they will respond nimbly in the case of a sharp rise in JGB yields. And lastly from me, obviously President Trump has been very busy in the Middle East. He's also been very busy on the trade front. He's been busy with a few side hustles as well. We had
Yes.
news yesterday that Trump Media has filed an S1 form, which is a regulatory form in the United States, for a Bitcoin and an Ethereum ETF, which I'm sure Cam will cover in your call a little bit later on. We also had news that Trump is launching a new wireless mobile brand in the United States, which is called, surprisingly enough, Trump Mobile. The flagship contract that they offer will be the 47 plan that costs $47.45 per month. Of course, those being the two presidential terms that Trump has served. And they're also launching the T1 phone, which is a gold performance focused smartphone built in America. And I promise you all of what I've just said in the last 60 seconds is entirely real, and it is not April Fool's Day, in case you've just joined the call. This is the world we live in, it seems.
It does strike me as just bizarre because I thought there was kind of like checks and balances in place to stop this kind of grifting by a president, but obviously I'm completely wrong.
Clearly not. Have you seen a picture of this phone?
Yeah, it's a bit of you.
Oh, massively.
It's definitely a bit of you. It looks like a mini gold bar. I can just see you walking around the jam pot with that, trying to find out ways to not pay your bill.
Here we go. I'll
But
pay the bill with the phone.
well, this is assuming you can.
Well,
Yeah, who knows? Yeah, thank you for that, Mr. Michael Brown. Let's crack on with just some headlines from the overnight news roundup again, put together by Zach. Always awesome. Make sure you give it a. Oh God, I don't know what's going on with my throat today. Make sure you give it a follow on our Substack, etc. Make sure you follow Zach in general. But obviously, I've got the Iranian headlines out of the way, so let's get some macro headlines done. So starting off with macro, Bank of Japan hold rates steady, plans bond purchase tapering starting April 26, as Michael's just spoken about. But yen weakens as Governor Ueda highlights downside economic risks. The Senate Republicans propose major tax bill revisions, including permanent business tax breaks, deeper Medicaid cuts and lower state and local tax deduction cap. That's according to the Wall Street Journal. The FT, they're saying that central banks plan to increase gold holdings, with 95% expecting to buy more in the next year, while anticipating a decline in US dollar reserves. Citigroup, they're predicting gold prices will fall below $3,000 as the commodities record day rally loses steam in the coming quarters. So a bit at odds to the FT story there. ECB's Lagarde pushes for stronger euro, arguing Trump's policies undermine confidence in the US dollar. That's in a FT op-ed. The combination of Lagarde and the FT there, who wouldn't want to read it?
match made in heaven, isn't it?
Well, exactly. UK Chancellor Mrs. Rachel from Accounts, considers reversing non-dom inheritance tax on global assets, potentially reshaping tax policy for wealthy residents. Almost as if that she's just finally woken up to the fact that wealthy residents would be leaving the UK based on her previous kind of decisions and the current state of the UK economy. So
Taken her long enough, hasn't it?
yeah, exactly. So, we don't mind a U-turn, but we'd prefer that you opened your eyes in the first place and saw that this was obviously coming. Geopolitics, excluding Iran, Trump resists tougher Russian sanctions at G7, pushing back against allies' calls to pressure Moscow into negotiations. US approves a $2 billion military sale to Australia, including fighter jet parts, strengthening defence ties. That's according to Bloomberg. According to Wall Street Journal, Trump leaves the G7 without new trade deals, but signs a joint statement calling for peace and stability in the Middle East. In equity names, before I hand back, because obviously I've already got the Iranian stuff out of the way for you. In equity, Senate tax bill boosts semiconductor investment credits, potentially benefiting chip makers as Trump pushes for expanded US projects. Amazon's Web Services emerges as a key SK Hynix customer for high bandwidth memory, with
Good.
AWS with AWS planning to launch its third gen AI chip by year end. OpenAI, they win a $200 million contract with the Pentagon for a pilot program to explore AI in administrative and security tasks amid tensions with Microsoft. Um, SoftBank, they've raised $4.8 billion via T-Mobile share sale, funding its ambitious AI initiatives. On this, I think I do remember PIQ actually posting this in the early hours. They've actually sold these shares below market price, so they're bit of a fire sale there for anyone looking to scoop up T-Mobile or anyone looking that was lucky enough to be on the bid of that. And finally, for me on the equity names, Mitsubishi in talks to buy Athenian Energy assets for $8 billion, expanding its US natural gas portfolio. I've said it before, I'll say it again. I think US natural gas, LNG, etc. Is definitely something to keep an eye on. I think that's going to be the next few years. Going to be a huge growth in that. Obviously, we've seen huge growth so far in the recent years, but I don't see it stopping. And that is it from me, given that I've got the Iran stuff out the way early doors. Back to you.
Good stuff. Thank you, Ryan. In
Hello?
terms of, oh yeah, I'm still here.
Yeah. Yeah, go on.
Oh, I'm sorry. I thought I'd muted myself again. Where was I? In terms of today, then, of course, focus will remain on geopolitical developments and also on any potential trade headlines that we get through the next 24 hours or so. But in terms of scheduled events, there are a couple of notable releases on the data docket. At 10 o'clock this morning, we have the latest ZEW sentiment surveys out of Germany. The expectations gauge, that is seen rising to 35 from a prior 25.2, while the current situation metric, that's also seen rising, albeit remaining deeply in negative territory at -75, up from a prior -82. And of course, this data referencing in June. And then at 1:30 this afternoon, 8:30 on the east coast of the States, we have the latest US retail sales data. Headline sales seen falling by 0.6% on a month-on-month basis in May, but the control group metric, which is of course the basket of goods that feeds into the GDP release, that is seen rising by 0.3% compared to the 0.2% decline that we saw in the month of April. We also get industrial production out of the States today at 2:15 London time. That is expected to stagnate in the month of May, which is the second month of stagnation actually, after going nowhere in April either. Other than that, there are no notable earnings today. We do get speeches from the ECB, Centino and Villeroy, and of course the FOMC begin their two-day policy meeting later on today, ahead of the latest Fed decision and press conference tomorrow afternoon. But besides those scheduled events, of course, the focus remains on geopolitical developments in the Middle East. And that is all from me for the time being. Hello?
Sorry, I've done what you've done. I muted myself and forgot to unmute myself. Sorry.
We're both as bad as each other this morning.
I was trying to clear whatever's in my throat. I don't know what I think. It's maybe just a bit dry here in the garden of England. Mr. Michael Brown, thank you as always. We've been very efficient today. Hopefully I'll be seeing you later for a beer. And also maybe Zach as well. Judith Chalmers might be out.
Oh, blimey.
Yep.
What's the
So
occasion?
well, you know what the occasion is. Hopefully you have a couple of beers with
True.
Mr. Anthony Credell, and the guys at Ninja Trader, but we'll see. But anyway, guys, thank you so much for tuning in as normal. Whatever you're doing, more so than ever, keep it tight. If you are trading, stay safe, and we'll see you all tomorrow. Much love.
Indeed. Bye for now.